please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets, they've started on a mixed note following the slim gains that we saw on the Wall Street overnight.
Expensive stocks will keep getting more expensive, and the value stocks will keep eroding more and more value for you. And 8 to 10 stocks core portfolio, capital preservation this year is key.
Price of oil could stay roughly where it is or go up a bit, or if there's any disruption, it could go up by a lot. I don't think there's a great chance of it falling dramatically.
There goes the bell, and the first trade is a little lower than what the Nifty showed us in pre-opening. It's just about 6 points higher, 10,773.
Earnings growth of about 15% is very decent.
You give an advance notice that this share is is going to go, because this surprise element is really short charging the investors.
There is now clear redemption pressure across emerging market ETFs, and that's impacting Indian flows as well.
Positioning has been that this is a market which is, let's mince no word, in the broader market going through a bear phase.
The rupee is a tad weaker because we have a double whammy. It's not just the little bit of strength in the dollar. It's also higher crude strength, which tends to impact us.
0.75% lower on the Nifty. I mean, advanced decline has only gotten worse.
Well, been a rough day for the market, and of course, let's see how the last hour shapes out, because for now, it's looking like slightly on the weakish side, actually, quite on the weakish side. If you're looking at the Midcap index, there's quite a bit of pain. This closing bell, I'm Manoj. With me is Surabhi, and Surabhi, of course, it's your birthday. Happy birthday!
Thank you, Anand, so much.
The bulls would be hoping that perhaps you would be, giving them some return gift. Perhaps a last-hour rally.
I don't know if I have anything to really offer here, but I think the bears really have a complete grip of this market after a long time, Anuj, and we've been discussing this for 10 straight sessions that this range of 100 and 120 points was not breaking. It's broken today. Of course, there is some global context. Even the Hong Kong market, for instance, sold off 2%. Some of the European markets are also weaker. But is this that convincing breakout that a lot of traders, a lot of bears were definitely hoping for?
Has it broken down? The low has been 10,650 in this range. We are still at 10,665. So an optimist would say today is the best day to buy. But look, this is close to breaking the lower end of the range. Now, the only reason I say is I would want to see tomorrow's follow through as well, because, we've had one day when it looked like it had broken the upper end of the range. It didn't. Now it's looking like it's breaking down, but let's see if it does. But the more you look at the market, the more it will tell you what's happening. It's only HDFC Bank, which is really sort of propelling the market, is preventing a bit of a washout here. Otherwise, it's a bit of a washout. And as we discussed in the morning, the uncomfortable question has to be discussed in the mid caps now. Is it now a bear phase? Because you're seeing risk off. You've seen the mid cap index fall about 17%, I think, from the high point. And the small cap index is down 21% from peak. So small cap actually is in classical definition. And this is indices that we're talking about. A lot of stocks are down 40, 50, 60% from the peak. And a lot of stocks, Surabhi, after going through value destruction, are seeing big decline today. And just take a look at some of these names: NBCC, CG Power. These are stocks which had already fallen so much, and now seeing big decline. HPCL, BPCL. HPCL is down 10%.
Yeah.
This is a large stock that we're talking about. So obviously there's some bit of panic, but right now I think the screen is telling you that bulls are not feeling good about this.
No, absolutely. Right now, a lot of these stocks making lows of the day. We've got a lot of ground to cover. Let's get started. Today, we get chatting with Ronak Onkar of Parag Parikh Financial Advisory Services. We'll look at if there are any changes in their core holdings. They'll continue to like a lot of the US FANG stocks. He is our alpha manager on the show today. We also discuss market fundamentals with SP Tulsian of sptulsian.com, Deepan Mehta, member of the exchanges, as well as Sudeep Bandyopadhyay, group chairman of Indie Trade Capital. And as always, our technical experts here to take you through what's been quite a difficult session for the bulls, Ashwani Gujral and Prakash Gaba joining in.
Okay, straight up, let's invite Ashwani Gujral. Prakash will also join us in a bit. Ashwani, good afternoon. So, been a rough day. If you look at the advanced decline, it's about 1:7. The Nifty is down 100. The mid-cap index down 2%. Purely from a day trader's point of view, good time to take profit home, or you think last hour could get even more tricky from here?
See, again, the basic core theme of no follow-through remains. Yeah, Bank Nifty is down 200 points. It's not a big deal. And if you see what's happening in the last half an hour, ICICI Bank has started moving back from the lows. HDFC Bank has not fallen all day. So it's quite likely that, you know, people who are late short players could get into trouble as the market maybe sees some amount of short covering. So if you are short since morning, I think good time to cover. And we have just taken some adventurous long positions just for the fact that the market refuses to show follow through on either side. Maybe you could get 50, 70, but Bank Nifty particularly is not showing great propensity to fall further. Now, whether this has longer term implications or not, that, you know, can change on a dime if, you know, crude starts to retreat and, you know, rupee starts to strengthen, etc. So I don't think I'm willing to take, you know, very long term type bets. But let's say for the next few days, the range may be shifting a bit lower, and it can shift, you know, just 100 points lower. The next range could be 10,600, 10,750. That being said, today Bajaj Finserv is a sell with a stop of 6,020, target of 5850. M&M Financial is a sell with a stop of 476, target of 460. And HUL is a buy with a stop of 1625, target of 1660.
Okay, so still a couple of buys on Ashwani's list. Let's also bring in Prakash. Prakash, it's looking quite weak now. Finally trading below 10,700. Your reading of today's fall and, of course, the stock ideas for now.
Good afternoon to you. But in the morning, we did say that we'll have an expanded day today, and we got an expanded day today. We had a target of 10,700 that got achieved and also got breached. The next technical target that we saw, perhaps, was somewhere closer to around 10,660 or so. It's just bounced from there. So I think we may see some kind of a bounce from here. Possible. Again, we may see an up move from maybe 30 to 40 points on Nifty is a possibility. And Bank Nifty, again, is refusing to fall. Strong support in the vicinity of 10,000. 26,350, 360 zones where it has seen a good bounce, and possibly we could see even 26,480 coming in. So possibly around 100 points on 50 to 80 points to 100 points is possible on Bank Nifty. Anyway, I have two shorts, both on the Reliance Capital still looks weak. It's a today and tomorrow trade. Can see a slide to around 865 zones, stop about 885. And even Lupin looks weak to me. Possible target on the downside is in the vicinity of 865. Stop about 80. Sorry, Reliance Capital is 380 target, stop 400, and Lupin is 865 target, stop 885.
Okay, fair enough. So both our technical experts believe that perhaps for last hour you could actually be looking at some buying trades as well, especially on the Bank Nifty. Let's see if that works out. SP Tulsian of sptulsian.com and Deepan Mehta, member of BSc and NSC, with us now. Good afternoon, Ms. Tulsian. Your thoughts first on what we are seeing in the broader market, because this is capitulation right now. Stocks falling 8, 10, 15, 20% after already having fallen so much all through the series.
Anuj, I could only pinpoint two reasons, which I have been able to understand. One is the physical settlement, which we'll be seeing after the expiry of this June series. Maybe case in point can be taken for CG Power, where the open interest was seen to be at 4.5 to 5 crore shares. And now that's seen having got reduced to 2 crore shares. So, obviously, every open position has a long as well as short. So maybe the longs are getting liquidated, and if there are no buyers, the prices definitely will fall. Because if you roll over the things, I'm not saying that at the expiry of the July you cannot roll over to August. But now the things, in 46, 48 stocks, which will be seeing the cash security settlement from July series, this is the last chance for them to have this cash settlement for once the June expires tomorrow. Then you will be having the security settlement. So probably that could be the reason that we are seeing this kind of carnage, in many of the mid-cap stocks, number one. Number two could be that increasing the margins, from 2nd July in the F&O, maybe to the as high as 28 to 30% or 25 to 30%. And that will seen quite this one. And in fact, it has been made compulsory for the brokers to collect the span margin and exposure margin both. Because earlier the brokers were lenient in collecting the exposure margin. They were only collecting one, that is span margin. So I don't think that now things will really be easy for the traders to take a call in the F&O also. Though many people are saying that one can do intraday, but if you read the provisions, it says that before execution of the trade you must have the margin to their account. So maybe the enforceability of these provisions will also be seen stringent going forward. once this audit and the inquiries all gets initiated by the regulators and by the exchanges. So these are the two factors which are seen to be making it nervous, and I think that maybe once tomorrow expiry gets over, we will be seeing the fresh lease of life, or maybe some kind of relief coming in from Friday.
Okay, by the way, the market's trend is very clear. It wants to make the stocks which are weak even weaker. I mean, just look at intraday chart of Sun TV. Just see that chart. You see that big move playing out on that stock, and that one right now is making lows of the day. SRF has been the other one where there's been quite a bit of weakness, so that one's also down quite a bit. And of course, the weakest has been CG Power, which is down 13%. Reliance Communications down 9%. NBCC down 8%. Adani Enterprises 10.5%, Surabhi. And PSU banks, of course, going through sharp decline. Look at IDBI Bank, 2 days back, it was flirting with 60, back to 50, back to earth.
Oh yeah, absolutely. It's just such a long list of stocks trending on the way down. Let's also bring in Dipan Mehta into the conversation. Dipan, I want to sort of talk to you about some of the stocks that have been the weakest. For instance, the decline today on the oil marketing companies is quite telling because of the way crude oil prices are moving higher. But how do you look at the persistent weakness that's set in on stocks like an ICICI Bank, even L&T for that matter, has had a couple of down days?
I think a lot of the kind of speculative or trading positions which were there in these counters are maybe getting squared off at this point of time. And clearly, as I've been seeing on your show, and that your observation is correct, that there's a flight to safety, there's a flight to quality, and portfolio managers who had got weak stocks or not so great in terms of quality stocks in their portfolio are trying to sell off those and get into some of the high quality stocks, which is why we are seeing that HDFC Bank is holding head above water in such turbulent times as well. So it could be a simple trade sell ICICI by HDFC that could be playing out over here. And I'm not surprised, I think, because these kind of trends can persist for a long time, and investors are just trying to protect their portfolio returns by moving to safety and quality stocks.
Okay, for now you'll have to say that things are now stabilizing. Perhaps a low for the day could well have been made now. Just see the intraday chart, of course, of ICICI Bank. That, of course, is one reason that perhaps you could say that the low for the day might have been made, and that would be interesting because it's a bit of a recovery that you've seen. Of course, HDFC Bank has remained strong through the day, and if you see the chart of the Bank Nifty as well, if you see its futures, they're again moving into a bit of a premium here. So there's been clearly some bit of buying which has been there. Let's see if that sustains or not. We'll take a break, and we'll be back and discuss some more stocks with all our experts.
Welcome back. Plenty of stocks on the weak side. The market's also really trying to fight 10,666 on the Nifty. We are just about 10 points off the lowest levels of the day. Not much has changed for the time being. You're seeing some interesting buying action on Radico Khaitan in a market like this. Let's pull up that intraday graph. So suddenly there is, and that's a massive spike on Radico Khaitan. Not quite sure if it's just some sort of a technical bounce that's happening on the stock or if there's more to it. Let's pull up a United Spirits. Not that I don't see that cropping up on the screen as quickly as this one, but maybe we can pull up a United Spirits as well. No, not really. Just Radico. Prakash, you want to quickly check up this stock? Radico Khaitan bouncing in a market like this one?
Radico Khaitan, yes, I feel that it can go up. Maybe we can see levels close to 430, 440 soon. The bar that is made in the last 1 hour is a good bar. So have a stop below 400 and maybe we'll go for a day or two up.
Okay, Sandeep Wagle is also with us. Sandeep, hi, good afternoon. What are your trades?
Afternoon, Anuj. I would go with a sell in a GSFC. Stop loss of 107, target of 96. A fresh breakdown has occurred. I think the move should come in. The next call is a buy in a Tech Mahindra that is holding, and I think a bounce back can see this stock outperform. Buy it with a stop loss of 700, target of 732.
Okay, clear sense of buying now on ICICI Bank, and that's really the reason that you've seen the Bank Nifty also cut its losses quite a bit. In fact, the Nifty may not have done it as much as the Bank Nifty has. Just see that chart of ICICI Bank. I think the low was 273 273 or thereabout, now trading at 278. So obviously, it was a bit perplexing, Mr. Tulsian, this big selling that took place on ICICI Bank today. But you reckon it's once again found some support, 270, 275? Anecdotally, it bounces back from here?
Sinuj, we have been liking the stock maybe at the level of 280, 282, and it is difficult to give me any kind of support level whether it will be coming at. But our advice is that be buyer from an investment point of view, and maybe at the current level also of 2, though it has risen from 2, as you have said in this last maybe 10 minutes, from 265 to 269 or 266 to 269. So definitely if we like it at 280, because having a medium term view, definitely we continue to have a positive bias, because we don't think that these all negatives will be seen having much effect. Maybe could have, again, it has to do with the technical factors, because if you recall about a couple of weeks back, ICICI Bank has moved to a level of 300 rupees when a lot of long positions got built up. So maybe that long is not seen getting rolled over, and corresponding shorts having gone at those levels may also be getting covered now, in this last 3 or 4 days. So this is just a technical factor of the fall, and now seen bouncing back again. But on a fundamental basis, we continue to have a buy call on the stock at the current level.
Okay. So once again, obviously, the sector of the day continues to be consumption. Godrej about 1.5% up. Dabur about 2% up in a market like this. And by the way, 3 or 4 of these FMCG stocks have hit fresh 52-week highs. Godrej, Dabur, Lever, of course, and Jubilant Food continues. Now it's actually knocking at the doorsteps of 1,400, that stock, as we speak. Deepan, obviously, this is the go-to area in the market. The question is how to pick and choose, because almost everything is, going to be trading at elevated valuations. Would you look at a tier 2 FMCG play like maybe Godrej or Dabur or Marico, or would you stick to the behemoth HUL?
No, I think, we should we are advocating staying clear of the MNC FMCG companies. The likes of HUL, ITC are operating in areas where there's a high degree of penetration has already taken place, and they are in mature products. And the way to play FMCG now is through companies which have got presence in emerging segments. Could be an Imami, could be Godrej Consumer, which is into insecticides as well as hair color. And then I think, there's this new brand of consumer-oriented quasi FMCG companies. They could be in retail, they could be in aviation, entertainment. So many sectors have opened up because of consumption on the whole going up in rural as well as urban areas. And some amount of exposure can be also to these kind of new generation so-called consumption-oriented stocks. Could also include auto for that matter. So it's not just FMCG. I think there are many choices and options available when you want to play the rising consumer spending in India, rural as well as urban.
Okay, Ashwani, from the low point, we've seen a decent recovery now on the bank Nifty. You were also referring to that. Perhaps ICICI Bank is leading it. But what are the charts saying on ICICI Bank now in terms of whether today's low should now be a sacrosanct support?
See, the low basically on ICICI Bank was the day, it had that large move on the downside. So maybe 260 is that low. But for the day, I think there is no further selling. So you could have a bit more short covering, but the longs we took at 230, those we have taken off because that was a kind of a scalping type trade. I think still lots of range bound activities there. Today's breakdown, if you go home short, tomorrow morning the situation could be completely different. So I am hesitating to play this like a trending move. And I'm still thinking that maybe market again does not show follow through and gets back into the range. This is what you should expect this year.
There's one more stock, Ashwani, which is Reliance, since we're discussing some of the heavyweights. Now, this is about some 70 rupees off its peak after going 1,000 plus. Is this the time to buy Reliance? Is it intrinsically looking strong to you? I'm talking about, the positional traders.
This is the stock to buy. Maybe today is not such a good day. Generally, you should try to buy stocks on the day they have a turn and you get a large upside, because that often allows you to be with the trend. Because even if you are a long-term investor and it falls 50 bucks, that long-term investor can get shaken up. So these are the right stocks, the 15, 17, 20 stocks which are all-time high stocks. But tend to buy them once they turn around. Because today, maybe a lot of stocks have just started a correction, because today Bajaj Finance and FinServ, etc., have not turned around like they do, generally speaking. Even large stocks will go through their corrections. So, whenever that settles down, I think this is one of the stocks you should buy.
Okay. Tata Motors is seeing some bit of recovery, and after 3 or 4 days of brutal selling, back-to-back days, again, not quite in the green yet, but from the low point, there's been a bit of a recovery. The other stock which is interesting is Voltas. Second day running now. That stock actually is making highs of the day in last hour. Yesterday also it closed actually at the high point. And today also, if you take a look at that stock, just look at that sharp spike in Voltas. 2% higher is what you have on Voltas now. And from yesterday's low now, you're talking about a 6-7% move on Voltas. Mr. Tulsian, your thoughts on the stock?
I think, Anuj, this stock is now at these levels. In fact, we have been saying this. In fact, yesterday also we have discussed when the stock fell to 500. And in fact, if you really ask me, probably this is the best entry point. And if someone can keep a view of 2 to 3 years also on the stock, probably this is available at the cheapest P valuations amongst the consumer durable space. Voltas, controlling 22% market share of AC, and the kind of growth which they will be showing, and the company is pouring into the other consumer durables also, like washing machine, refrigerator in the joint venture company. So everything is positive seen going ahead. In fact, so with the small, below expectation growth having seen in Q4, the stock has corrected to these levels, which otherwise was ruling at 600 plus. So I think this is an excellent entry opportunity for those who really wish to see the hiding place, safe hiding place, and where one can expect a return of 18 to 20% even in this market on an annualized basis.
Okay, all right, Mr. Tulsian, we'll leave it on that note for today then. Thanks very much for being with us and sharing your viewpoint on all of those stocks. Well, on that note, let's move forward and say hello to our next guest. Ronak Onkar of Parag Parikh Financial Advisory Services is with us now. Ronak, good afternoon. Always good talking to you. The market has been in the doldrums, really, and now we're seeing some signs of sort of, tapering off, or at least a slowdown in the international markets as well. First things first, any key portfolio changes in the last 2-3 weeks since we spoke? Are you still, absolutely sort of, staying invested and keeping your faith in some of the FANG names like Facebook and Google?
So to give a summary, we keep owning the same ideas that we had in the past, and at a time we also have 23% of the portfolio in cash, and it's not something where we think that market is going to fall and we'll deploy at that time. The whole point is that it's a residual cash which we have accumulated because of money flowing in and some other older ideas which have become expensive. We have sold out of them, and the cash will be deployed when we believe that the valuations are reasonable. The portfolio more or less remains the same.
Okay, Ronak, hi, good afternoon. So, you're not worried about all this talk of tech bubble in US? Combined of all these 4 stocks account for more market cap which is higher than GDP of most countries.
Yeah, so if you look at the absolute terms of market cap, it is unprecedented to have $3.5 trillion in just 5 or 6 stocks. The point is these companies are still growing in a growing market where their earnings keep growing, the cash flows keep growing, and they keep penetrating into emerging markets as well. And we are seeing that all developing countries where they enter, the internet penetration is not as high as their home markets. And as they grow, they're not having a local incumbent player which is of the same scale and size and technological capability as they are. They find it easy to penetrate that market, and they can deploy cash accordingly. So what we are finding is they are not really expensive if you look at valuation point of view. So if you look at, say, P multiples, cash flow multiples, or even the PEG, you'll see that these are in a reasonable range. I wouldn't say they're very expensive right now.
Okay, fair enough. Ronak, what we're seeing in the market right now is obviously this whole flight to quality. It's just money moving back towards tried and tested big NBFCs, some of the mainline consumption stocks, whether it's staples or discretionary. And these stocks are just hitting new highs every single day. What would your advice be, and would you have any interest in some of the names like, be it Dabur, Marico, etc.? I mean, would you at all look at increasing holdings over here?
So we have been seeing that happening for the past 2.5, 3 years, where most of these quality names were getting priced up, and I don't think we ever precedented or imagined that it will become even more expensive from that point onwards. The idea is that for us, it's simple. The business is of good quality, fine, but the valuation has to be attractive enough for us to enter at that point in time. So, however, we keep tracking these companies and these businesses, but I don't think the valuation is very reasonable right now. And when we buy or transact in them, the fact sheet will reflect that eventually.
The consensus that we are now hearing, Ronak, is that this year you should be in large caps and the mid caps could be brutal this year. We've already seen part of that play out. Would you agree? Would you be in that camp?
So if you look at our portfolio, we have mega caps and we have large caps and we have some small amount of exposure to mid caps. So I think we are more or less oriented towards this portfolio for the past year or so, or even more than that, to be honest. So we are in that same camp for a while. So I don't see too much of that changing unless valuations are really attractive in some of the areas to deploy new money in.
You do have some small pharma holdings, Ipca, Dr. Reddy's, Lupin, Pfizer, and that's really been the sector of June 2018, right? Do you also believe that this is actually a real bottom, a turnaround that's quite firm, and it's here to stay?
So I have always thought that pharma is a very difficult sector to predict right now. Broadly, we can say that companies will do well because of the tailwind that the industry and the business has. But at the same time, when you dive down into individual companies, you start seeing the product exposures, the geography exposures, and some of the choices that the managements have made in terms of spending on R&D over the past few years. And that's what will reflect now in many of these companies. So larger companies we have seen who have decent management, who understand how to sell in international markets as well as the developed markets and domestic markets. Plus they have a decent balance sheet with them, and they can take advantage of new products coming in the market for sale, or even invest more in R&D. So I think more or less these few combinations of factors in some companies we like, and that's what the portfolio comprises of. But we never could put a conviction of saying that we'll put 5% in one stock and we'll see where it goes. It's very difficult to predict on a company-to-company basis how the market shares will look like.
How big a risk is macro this year? We have crude prices at 74, 75. That's been quite sticky. There's rupee moving to multi-year lows now. And of course, this year, you have in general higher interest rate scenario. This politics as a risk. So your thoughts on the entire macro picture right now?
So I think macro risks keep coming and going based on certain events. I think the bigger trend that we can see is the interest rates going up. It's a very interesting thing because over the past several years we have seen a declining interest rate and valuations moving the way they are. And actually a lot of investors who are new in the market are not oriented to the idea of what should we do in an increasing interest rate environment. So I think that's when the pressure on valuations can be seen. But again, this is all speculation. We have to see how it actually affects and how businesses deliver at the time. Because even in the past, in high interest rate environments, there have been many sectors of businesses emerged at that time, which other traditional sectors may not have done very well at that point in time. So we have to keep a watch on different areas of investing where there can be pockets of value available.
Okay. Finally, just I'm looking at Persistent Systems, which is a key holding for you. Memphis, which is again a key holding for you. I mean, any specific reason why you're looking more perhaps at some of the mid-cap IT plays, the Indian IT plays? Would you at some point in time also look at some of the bigger ones like Infosys, TCS?
So when we track IT stocks, we track all of them. The reason we have these two stocks is for Persistent, it doesn't have the baggage of traditional managed services that the larger companies have. And they are trying to do something differentiated in terms of the way they approach their services play. So that's what we like right now. In Emphasis, it has been a very old investment for us, and it is now actually playing out because the owners have changed and capital allocation has improved quite dramatically, and the business has also de-risked itself from the HP services part. So mid-cap IT is not a choice, it's just that we are finding some differentiated plays and it was available at a reasonable valuation, so we picked it up. Not that rest of the IT sector is not reasonable, but we keep tracking them.
All right, Ronak, good talking to you as always. Thanks a lot for joining us. That's the view from one fund manager who has outperformed the market and of course has some cushion in terms of the FANG stocks as well, the Facebook, the Apples of the world in the US. The market, by the way, is recovering quite a bit now, and as we discussed, the Bank Nifty is leading it, and both ICICI Bank and HDFC Bank, of course, are leading quite a bit. So could be quite interesting. Today we could have again tested the lower end of the range and could have bounced back. We'll find out, of course. For now, we'll take a break, and up next, we'll get you the BTST calls from our technical experts.